Good afternoon, everybody. This is Gautam Mitra. I'm Director of Optus Systems, as you can see, and co-host of this webinar. We are delighted to be introducing RavenPack in general and Peter Hafez in particular. Optus is a research and development company and is passionate about exploiting research in optimization and risk analysis. Our association with RavenPack goes back several years, 6 to be precise. We undertook sponsored research with RavenPack, and indeed that got us hooked in the interesting topic of news analytics applied to financial models. RavenPack's news sentiment analysis adds value to the applications in the domain of finance. Indeed, they are providers of news sentiment metadata. RavenPack has established itself as a major player and a provider of news sentiment data. They are indeed very much respected, and that's why we have so many people attending to this webinar, and appreciated by the industry stalwarts. So I won't take much more of your time. Indeed, today's delivery of the webinar and its contents will set out how much they have progressed in this domain. Thank you, and over to Hugh.
Thank you, Professor. A good day to everybody, and a warm welcome from all at RavenPack to our webinar. My name is Hugh Taggart, and I will be your MC today, so to speak. Here is today's agenda. I will start off proceedings by giving you a quick overview of what RavenPack does. I will then introduce our main speaker, Peter Hafez, RavenPack's Director of Quantitative Research. He will show you how we create macro sentiment indices using the RavenPack data, and he will also present a case study on possible trading models using the indices. We'll then summarize and answer any questions you may have. Please ask any questions by typing them into the GoToMeeting control panel that is normally located on the right-hand side of your screen. Please note, if we don't have time to answer your questions either in writing or verbally during the webinar, we'll contact you with an answer soon after. Also, we'll be conducting the draw for the Amazon Kindle preloaded with an ebook of Peter's research at the end of the webinar. The lucky winner will be notified by email. So what does RavenPack do? Here's a high-level flowchart of RavenPack's business. Basically, we are ingesting unstructured text from the Dow Jones family of publications, including the Wall Street Journal, Barron's, and the Dow Jones Newswire, and turning it into structured data for use in quantitative applications. The process is very quick, completed faster than the blink of an eye. We produce data in 5 main areas, which are entity detection, relevance scoring, event detection, novelty scoring, and sentiment analysis, which you can see in the center panel of this flowchart. I know Peter will spend more time on these 5 areas, so I'm not going to spend much time on them now. So with that, let me introduce Peter. Peter Hafez is a very experienced quantitative researcher who's been working with the RavenPack dataset for the last 5 years. In 2012, his research team was recognized with the Technical Analyst Award for Best Specialist Research. So without spending too much time going through Peter's long list of qualifications here, I'm just going to hand over and let him get on with it. Peter.
Thank you, Hugh. Hello, everybody. Again, thank you for participating in this webinar, which main focus is to show how to build country sentiment indicators for global macro trading. More specifically, we're going to show how such indicators can be used for short-term Forex trading. The idea originated from a paper published in December of last year, focusing on US sentiment only, while this presentation focused on our latest paper released in April, rolling the concept out into multiple economies. As part of the presentation, I will first provide an introduction to news analytics, followed by a description on how the analytics can be used to construct a set of sentiment indicators. This will be followed by a description of our crossover strategy, which can be used to trade short-term Forex. The strategy is then evaluated using the Deltex backtesting platform, while we finish off the presentation providing a sneak peek into our latest research. It's a well-established fact that news impacts securities prices, often in more or less sophisticated ways, whether it being scheduled announcements above or below expectations or completely unanticipated news. At the time of the news event, prices typically jump, while the nature of the news and the circumstances in which it is being released tend to drive the following momentum or reversal effects, lasting for minutes, hours, or even days. While the initial reaction may be more stylized in nature, the following effects are often more complex. To make sense of it all, it's often valuable to understand the general sentiment trend for a given company, sector, or market. Given the big data characteristics of news, getting a grasp of all the data available out there becomes close to impossible without an automated process for extracting information from news. Before looking at how a sentiment indicator can be constructed, let's take a quick look at the 5 key attributes making up a news analytics dataset. The first key attribute is entity recognition. Obviously, understanding what entities are involved in a news story is key in order to make sense of any other extracted information. Recognizing entities can be especially tricky for certain types of entities that have a close relation to more common language. For instance, it seems important to understand if a story is referring to the word total, a quite common word in financial language, or the French energy company Total. Or if the story is about Gordon Brown, or if it's simply making reference to the color brown. When picking up the word turkey, we want to make sure that we are talking about the country and not the bird, which is not an unimportant distinction. The count frequency of the word turkey tends to increase significantly around Thanksgiving, and we don't want stories referring to how to do a turkey roast to be tagged as a terrorist attack. Building archives for backtesting purposes adds additional complexity into the entity recognition process, as it needs to become point-in-time sensitive. For instance, understanding when Bill Clinton speaks as the President of the United States and when he's not can be potentially important. The second attribute is relevance, which doesn't refer to how much the story will move securities prices, but simply how pertinent the entity is in the story. Typically, a score greater than 75 means that the entity is highly relevant to the story, while a score of 100 indicates that the company plays a target role in an event, for instance, the country receiving a credit rating or being the target of a natural disaster. Novelty refers to whether the news is new or novel over some time horizon. We typically consider a one-day rolling window. That is, if there has been silence on a particular event for more than 24 hours, our novelty scoring resets to 100, indicating it's the first instance of the event. The last 2 important attributes include event detection and sentiment scoring. While sentiment provides an opinion on direction and potential strength, being able to detect the underlying event provides valuable information when deciding on the decay of the signal. Finally, filtering on particular event types can be useful when constructing sentiment indicators, as certain news may be more noisy than informative depending on the application in mind. Having covered the basic attributes of a news analytics dataset, let's turn our focus towards our country sentiment indicator methodology. To create the indicators, we use RavenPack's global macro package. As a first step, we need to identify all the news relevant to the economies we wish to track. More specifically, we focus on news for the US, Eurozone, UK, Japan, Switzerland, Canada, Australia, and New Zealand. In effect, we end up creating a set of indicators covering 8 different economies. News related to a given country can be easily identified filtering the data by its country code, a field which isn't shown in this example on the slide. It should be noted that the Eurozone sentiment indicator is created including news on all Eurozone constituent countries, as well as news for the ECB and the Eurozone entities, none of which have a country code. To ensure focusing only on highly relevant news, we use a relevance filter of 100. In effect, this means that we only include news where the given entity plays a target role in an event. As part of the global macro package, RavenPack is able to detect more than 890 market-moving events. For the equities package, we detect about 520 events. These can all be split into one of 5 broader topics, including news about business, the economy, the environment, about politics or society. To provide an idea of the news events belonging to each topic, let me provide a couple of examples. For business, news could be about government bailouts or credit up or downgrades. Economy includes general economic announcements, treasury bill auctions, as well as different sorts of economic guidance. Environment covers primarily news about natural disasters and warnings about natural disasters about to take place. Politics covers, for instance, elections and presidential appointments, while society captures civil unrest, evacuations, assassinations, terrorism, as well as war and conflict. All of this information is captured in real time as it occurs in the news and is fed into the calculation of the sentiment indicators. It should be noted that we filter out any news mentioning currencies, as these tend to be more related to recent price movements. Finally, in order to capture the sentiment trend, we built a set of faster and slower moving sentiment indicators by taking a 1-day, 1-week, 1-month, and 3-month moving average of RavenPack's event sentiment score, also known as ESS. In the table on this slide, we have included a select number of columns representing the relevant information used to create the 1-day moving average for the U.S. economy at a given point in time. In this case, we get a score of 32.67 by taking a simple 1-day average of ESS. As part of creating a simple strategy, we take a technical approach to fundamental news. More specifically, we create a trading signal whenever we observe a crossover between short-term and long-term sentiment captured by different moving averages across the RavenPack event sentiment score. In the chart on the right-hand side, we have shown the example of a 1-month versus 3-month sentiment strategy on the U.S. economy. The example covers the period January 2000 through December 2012. As can be observed, the frequency of a crossover is relatively low when using 2 relatively slow-moving indicators. Moving down to a 1-day moving average significantly increases the number of potential trading signals. When generating a signal, 2 types of crossovers exist. 1, where the short-term index crosses from below and above the long-term index, in which case we take a bullish view on the relevant currency. And 2, where the short-term index crosses from below and above the long-term index, in which case we take a bearish view on the relevant currency. In essence, signal direction is decided based on whether short-term sentiment moves more bullish or bearish than long-term sentiment. Further assumptions or restrictions as applied as part of the strategy includes only trading a crossover when new news occurs, and not when news fall out of our look-back window. We simplify the strategy by taking a fixed investment horizon as measured in hours from 1 to 10. We hold no overlapping signals, that is, while we already invested, the position is kept until the end of the fixed investment horizon, ignoring any new signals coming through. Finally, we treat all currency pairs the same. Same investment horizon, same crossover strategy, etc. So here's an example of what the sentiment indicators look like. Overall, it looks very much like pricing data. In yellow, I've highlighted a crossover from above and below between the 1-day and 1-month U.S. sentiment indicators. In effect, this would have triggered a bearish view on the dollar and hence a long euro-dollar position. Looking behind the numbers, in this case, the bearish U.S. dollar view was driven by the U.S. being the target of an embargo, which should impact U.S. exports. Having shown how to calculate the sentiment indicators and how to formulate a simple crossover strategy, let's try to have a look at an actual backtest. To run the backtest, we have used the DCS platform, a hosted solution offered by Deltex. It allows users to quickly backtest different scenarios and get a bunch of interesting performance statistics. Given that we have already implemented the code, we have made it available to existing as well as new DCS users to play around with the data. On this screen, we show the strategy manager on the Deltex platform. This offers an overview of all the different strategies that the user has available, either based on their own creation or code downloaded from the Deltex developer network. As you can see, we have loaded our crossover strategy and have currently nothing else available. To start a backtest, we simply need to click Run. As a next step, we are taken to the strategy runner. Here we can select the instruments we're interested in trading. As part of our backtest, we have selected a portfolio of the 7 major currency pairs. You can also select the backtesting period that you want to consider. Here we use the maximum range available on the platform from January 2010 through March 2013. It should be noted that your own pricing data could be uploaded as well, allowing for an extended backtest if desired. Finally, we decide to include a warm-up period of 3 months when calculating the sentiment indicators to ensure that we have the proper long-term sentiment indicator values. And then we simply click Next. As a final step, we need to select our input parameters. We assume an initial capital of $10 million and a bet size equivalent also to 10 million. We select the 1-day versus 3-month crossover strategy and select an investment horizon of 9 hours. Finally, we're able to select whether to trade on US sentiment only, trading all currencies at the same time equal weighted, or to trade on non-US sentiment or on both. Having decided on the input parameters, we simply need to click OK for the strategy to run. Running the entire portfolio since January 2010 takes about 1 minute when running in catch mode. Now, let's take a look at the performance. In this first backtest, I run the strategy on US news only. On the left-hand side, you can see the input parameters used for the strategy. The chart shows the cumulative P&L, trading across all 7 currency pairs, equal weighted with a 9-hour holding period. As mentioned previously, we run the backtest over the period January 2000 through March 2013. As you can see, the strategy was able to generate a nice profit over the backtesting period. Looking into the performance statistics, we arrive at an overall information ratio of around 1, with short trades clearly showing the strongest results. In fact, we get an information ratio of 1.46 looking at short trades only. In terms of hit ratio, we get about 51%, leaving us with an edge of 1%. An edge which is further supported by an overall average win to average loss ratio of 1.13, again with stronger results for short trades. The reason for seeing a large number of drawdown days can be explained by the infrequency of the signal, as the platform considers non-trading days as days with loss. In total, we generate about 3,600 trades originated from about 500 crossover signals over the entire backtesting period. This amounts to about 3 signals per week. In the table on the right-hand side, we have included the P&L contribution for each currency pair. As can be seen, all currency pairs contribute with positive performance, with Swiss franc, sterling, and the euro delivering the most profit. Overall, we believe these results show promise in formulating a profitable short-term trading strategy based on US sentiment inflection points. Only drawback is the number of generated trading signals, which tends to have a negative impact on our information ratio. To increase the number of trading signals, we turn our focus to the other side of the equation. While US sentiment signals trigger trades across all currency pairs at the same time, trading on non-US news will only trigger a trade in one of the 7 currency pairs at any given point in time. Still, including non-US sentiment we increase the likelihood of generating significantly more trading signals. Besides increasing the number of trading signals, moving beyond US sentiment allows us to check the robustness of our results. That is, if sentiment crossovers contain information for short-term Forex trading, it should work across multiple currency pairs and based on news from both the US and the Eurozone when considering, for instance, the euro-dollar. To create a non-US sentiment strategy, we apply the exact same assumptions and input parameters. Running such strategy gives us the following cumulative P&L profile. In contrast to trading on US sentiment, which triggered a trade across all currency pairs, trading on non-US sentiment only triggers trades in one pair at a time. For example, if a crossover signal is identified for the UK indicators, we will only trade cable. Likewise, if a crossover signal occurred for the Swiss indicators, a trade would be made in the Swiss franc versus US dollar currency pair. Again, trading on non-US sentiment, we're able to generate a profitable strategy over the backtesting period. If we turn to the performance stats, we get an overall information ratio of about 1.22, again with stronger results on short trades with an information ratio of 1.63. In terms of hit ratio, in this case, we get an edge of about 2 to 4%, something which is again supported by an average win to average loss ratio above 1. In total, we generate about 1,150 trades over the entire backtesting period, which amounts to almost 7 signals per week, about twice that based on US sentiment. In total, across the two strategies, we end up trading more than 500 signals per year. In the table on the right-hand side, again, we include the P&L contribution for each currency pair. As can be seen, all currency pairs, except for Kiwi, contribute to the positive performance. This can likely be explained by too little New Zealand-specific news, resulting in very few signals. It should be noted that we did find Kiwi profitable trading on US sentiment crossovers, where the lack of data wasn't an issue. As previously mentioned, the proposed strategy makes some very simple assumptions. This obviously opens up for the potential of further enhancements. More specifically, one could consider applying a more tailored approach, treating each currency pair individually in terms of the crossover strategy. For instance, it may be more profitable to use the 1-day versus 1-month indicators for one currency pair, but the 1-week versus 3-month indicators for another. It may also be useful to consider different holding horizons across the different currency pairs, for instance 6 hours for cable, but 11 hours for euro-dollar. Or perhaps apply different leverage depending on the confidence in the generated signal, depending on whether it's being bullish or bearish. Other ideas could include applying a stop-loss strategy, or perhaps even filter out certain types of events that tend to provide more volatile returns, or perhaps should be treated more from a reversal point of view. Having already presented one way of potentially trading RavenPack's country sentiment indicators, we now provide a webinar exclusive, a sneak peek into our current research. Instead of generating signals based on crossovers between short-term and long-term sentiment for a given economy, we construct a relative sentiment indicator, in this case for the euro-dollar, by taking a ratio of Eurozone to US sentiment based on a 3-month moving average of our event sentiment score. The blue line on the chart shows the development of our Euro-US dollar sentiment indicator between January 2010 and December 2012, while the red line shows the development of the euro-dollar itself. We then form a simple trading rule in that whenever Eurozone sentiment strengthens relative to US sentiment, we short the euro-dollar, while we go long when US sentiment strengthens relative to the Eurozone. Hence, in effect, we treat the indicator as a potential reversal signal, being in the market at all times, either long or short. On this chart, we show the cumulative return of our proposed reversal strategy. Over the 3-year backtesting period, we were able to generate an information ratio of about 0.9 with hit ratio of 52% and an average win to average loss ratio of 1.09. The total unleveraged cumulative return reaches about 32% over the backtesting period. Finally, in terms of spread, on average, we get about 4.3 pips per day with an average holding period of 2.2 days. As part of our research, we not only plan to extend the strategy further back in time, but also to roll it out into multiple currency pairs, something we believe will further improve the risk-return trade-off of the strategy. That's it for me. Hope you have found our results interesting. Please stay tuned as I turn over to my colleague Hugh Taggart, who will provide a quick summary as well as moderate our Q&A session.
Thank you very much, Peter. Before we get into the Q&A, let me just quickly summarize. RavenPack's in the business of systematically extracting information from text to use in quantitative applications. Our data is used in many ways as an event alert or circuit breaker on occasion, but most commonly it is used in aggregate as a factor. What we've shown you today is an example of such a factor. We've briefly shown you how it can be constructed from RavenPack's raw data and how it could be used in a trading application. This is just one use case. Our factors could be used across many asset classes and investment horizons. We currently also produce factors for single stocks for those equity traders out there. The factors might also be used by discretionary investors as an ideas tool for trades or traffic light to add conviction to a trade or a group of trades. Of course, we'd all like you to test our data if you aren't already or haven't already. We've up to 13 years of data available for back testing, and you may request we contact you or request a trial at our email address info@ravenpack.com. Finally, before we head into the Q&A, please note that we'll be taking part in the Optus Conference in London on July 2nd and 3rd. We would love to see you all there. And here I have the first question. Peter, you've talked here about using the RavenPack data with a short-term intraday investment horizon. How about if I have a holding period of, say, days, weeks, or months?
Typically what we find is that in order to can you say extend signals into longer investment horizons, you need to have aggregation windows that are more in line with the investment horizon you're interested in. So for instance, if you are interested in taking, let's say, a monthly view, you may want to apply, let's say, a 3-month aggregation window or perhaps a 1-month aggregation window. In fact, also just to provide an example, the reversal strategy, the one-day reversal strategy that I used as an example here, we actually tested that looking into a monthly horizon as well, using the same set of indicators. And we found that there was value there on the monthly horizon as well, but more from a momentum point of view. So in effect, it very much comes down to, you know, what do you want to extract, and then how you build your indicators.
Okay, great. I have another question here for you, Peter. Do you use an SMA or an EMA, I guess that's a simple moving average or exponential moving average, to generate the time frame indicators?
Here it's just a simple moving average. You can obviously do something which is, can you say, put more focus to more recent events. But in this case, we have just done something very simple and just use a simple moving average.
Okay, great. And another question just come in. Have you ever looked at combining the RavenPack data with fundamental systematic measures of country strength to identify strong countries with positive sentiment, but avoid positive sentiment weak economies vulnerable to crisis?
I think it's definitely very interesting to bring in other types of information as well. News and news sentiment is just, can you say, one element in an overall strategy. And we have definitely seen that there are some very interesting interaction effects with other types of information. We haven't ourselves specifically looked at combining external data or third-party data with our analytics as part of our research, at least not on the global macro side of things. We have done quite a bit on the equity side, and there are definitely some interesting effects. And I would expect the same to be present when looking at global macro news.
Okay. A similar question. On a similar note, on fundamental analysis, is there a way you can tie up sentiment data with equity fundamental data, like quarterly reports, figures, and ratios?
Well, I'm not sure actually about specifically what this question is about, but I guess it depends on what is your existing platform in which you construct your models. You can definitely relatively easily bring in a sentiment indicator into your existing platform or environment and match it up in that way and run it through your models in combination with whatever data you else have feeding in.
Okay, then a question about trading costs. What is the trading cost assumption in the backtest that you conducted?
In these particular backtests, we have applied a zero transaction cost assumption. So in order to figure out whether it's a tradable strategy, one obviously has to build in transaction costs. Of course, given that you trade the majors, the costs are relatively small, but I can say in terms of pips, the one-day reversal strategy, which I finished off with, we had about 4.5 pips per day, and the average holding period was about 2.2 days. But where the other strategies, that looked at the crossover strategies, it would be anything between 2 and 5 pips per trade. And of course, this is, can you say, taking this relatively simple approach that we have taken. There are obviously ways of potentially improving the strategy by for instance, applying a stop loss, among some of the other things that I mentioned.
Okay. There is a question here about how many news sources we have added to indicators over the last year, and a related question about what is the universe of news sources. I'll take that one. Our universe of news sources is confined to the Dow Jones family of publications right now, so that is the Wall Street Journal and their regional editions, the Dow Jones Newswire, and any publications that they take in from MarketWatch, and also the weekly publication Barron's. A related question was, do we use social media? The answer to that is, at the moment, we do not use social media. Obviously, there are issues with social media, as evidenced by the April 23rd event. We do know that the Dow Jones journalists spend a lot of time monitoring the official channels that the companies or organizations, their official Twitter handles. So we use the journalists at the moment as a filter. But it's not. It is something that we're interested in and are researching. I have a question on equities here. For individual stocks, what kind of sentiment indicator can be built? Trading strategies around earning announcements can be thought of. Any extensions along these lines?
There are definitely many different things that could be done with news, and trading around earnings is definitely one of them. Typically, we work with two types of indicators, and one type is focusing on capturing sentiment. So whether it's, can you say, whether the news about the company is more or less positive, or negative. And the other one is based on media attention. So it's basically figuring out whether a given company has more news than what you would normally expect for a given company. And the reason why abnormality of news is interesting is that certain companies just have more news about them than others. And obviously there's a large correlation here to size. So your Apples and your Googles will get more news than, can you say, some small cap company out there. And the way you can apply it, the possibilities are almost endless. It very much comes down to your own, can you say, imagination, really. We have done some research where we look at enhancing, can you say, a reversal strategy based on the abnormality of news flow. We have looked at the concept of sentiment momentum. We have looked at how the interaction effects are between sentiment and stocks that have seen recent high volatility versus low volatility. So there are lots of different things that can be done here. In terms of earnings, yes, it would definitely be interesting to see how a company was portrayed in the news going into an earnings event, and to see how that might affect markets can you say react when the actual earnings announcement comes out. Other things that might also be interesting is looking at analyst ratings, something that is typically moving prices. You may be able to use news kind of in some way to position yourself before analyst ratings typically come out. So, and in order to kind of identify when there's a likely analyst rating coming out, well, you may look at what type of patterns of news tends to trigger a reaction from analysts. And then you may be able to position yourself beforehand. So there are lots of different things that can be done, creating short-term or long-term indicators, looking for sentiment reversals, looking for different types of data overlays, interaction effects using sentiment and third-party data.
Okay, thanks. I think that kind of answers the previous question about tying the sentiment data in with fundamental data. I hope that has answered that question too. So moving on, we have a question here. What is the correlation between your signal and the other popular indicators?
In terms of, it obviously depends on what popular indicators we're looking at, whether it's within the sentiment space or whether it's can you say indicators in general. Typically, when you look at the equity side, if you look at something like momentum or value or quality or some of these more traditional factors, we typically find a relatively low correlation to these factors. We did a paper where we introduced the concept of a news beta, where we related a market level sentiment index to individual stocks. And here we found that looking from 2001 through 2012, there was a correlation of about 5%. But obviously, the correlation can change over time if you look at it from a more dynamic point of view. There's also been some research out there done by Macquarie where they have found similar type of results in that there are relatively low correlation between news-based factors and more traditional factors. If we look into the macro space, we have tried to relate, can you say, a global sentiment index with let's say more traditional consumer confidence indicators like the Michigan Consumer Confidence Index, and here we have found that the correlation is not necessarily that high, and in fact, when we built a model that tried to predict GDP numbers, we didn't really find the Michigan Consumer Confidence Index significant as an additional variable, but we did find sentiment highly significant. So there are typically, you will see some higher correlations during some environments, but on average, the correlation is fairly low.
Okay, great. I have a question here. In my experience, news on the whole has a positive sentiment skew. Have you found this through your research?
Yeah, definitely. It's quite substantial, but it very much depends on the type of news you're looking at. It's definitely true when you look at equities. At least for the U.S., you see a relationship about 2-to-1 in favor of positive news, and it was really only when you went through the most, can you say, well, around the bottom of the financial crisis, that there was more of a 1-to-1 relationship. But these, can you say, sentiment biases can also change as you look through, let's say, the business week. So typically you tend to see Mondays having the most positive sentiment bias, and Friday being the one with the least positive sentiment bias when you look at business week. And clearly you can see companies releasing a lot of bad news during weekends. When you look at global macro data, you don't see this positive bias in the same way. It doesn't seem to exist to the same extent. Some of that may be explained by a lot of news being generated, originated from press releases, where that's not the case to the same extent, or can you say, when you look at global macro news. We still found that there was most bad, can you say that there was a significant bias towards negative news when during weekends for macro news. So the weekend, negative news weekend effect still persisted when looking at macro data.
Okay, thanks. There's a question here: is how would we deal with past news incidents like the Twitter's hacked news account? Does your system filter news? We take in all the content that we receive from Dow Jones and the Wall Street Journal, etc. We would have received that if Dow Jones picked it up, if they were monitoring the news wires and so on. We would have received it. If Dow Jones had published it, yes, we would have detected an event there. It's more than likely that Dow Jones, following normal journalist practice, will double-check any rumors or speculation that they receive, and I think in this case they did detect that it was erroneous. I have a couple of admin-type questions to answer. So, as where can we find the recorded webinar for later watching? We will be emailing Peter's ebook out to all attendees, and along with that we will have the recorded webinar and the presentation available. There is another question about where can we find a reference that Peter made to the reversal strategy. For the person in particular, we will definitely email you that research. I am running out of questions.
I have a question here at my end asking about how we calculate the information ratio. I just wanted to quickly cover that. And we take a very simple view on it. We basically use a zero benchmark. So it's in effect just the annualized return divided by the annualized standard deviation, including can you say zero trading days. And that was also why I made the comment that given you're not trading every day, that tends to penalize your information ratio. If you only evaluated your actual signals and excluding zero trading days, the information ratio would obviously be a lot higher.
Okay, great. I'm just about out of time, and I think we've got through all our questions. I'd just like to say on behalf of RavenPack that thank you to OptiRisk and Unicom for arranging the conference, and thanks to all of you for attending and for the great questions that you've posed. Thanks also to Professor Mitra and Peter Hafez for their part in the presentation, Peter in particular. And once again, if you have any questions, comments, or would like to have a look at our data, please email us on info@ravenpack.com. Otherwise, we wish you all a pleasant day, and we look forward to hopefully seeing you at the Unicom OptiRisk conference on the 2nd and 3rd of July, or speak to you at another date. Thank you very much, and goodbye.